For the better part of a decade, British Columbia's real estate market operated on a simple, volatile formula. Chronic supply shortages collided with frantic bidding wars. By the spring of 2026, the speculative fever that drove those price spikes has transitioned into a calculated structural realignment. This bar chart compares the current price floor for single-family homes across the region. In Victoria, the benchmark is holding near $1.02 million, while Nanaimo sits at $814,400. While these benchmarks remain flat, the actual speed of the market has slowed. Properties that once moved in days now require weeks of negotiation and deeper data analysis to close. Understanding where the island is heading requires looking beyond individual neighborhoods to the national economic shifts dictating local behavior. The primary force dictating this shift is the Bank of Canada. It held its policy interest rate at 2.25% throughout the first quarter. After the jagged spikes of 2022 to 2024, 5-year fixed mortgage rates have settled into a horizontal corridor between 3.89 and 4.14. This predictable ceiling ends the period of rate shock. Buyers are no longer sidelined by the fear of unexpected hikes. Although capital remains expensive, it is finally calculable. Households can now lock in long-term budgets with the confidence that their borrowing costs have stabilized. This predictability acts as a psychological floor for the market. It provides the stability necessary for buyers to re-enter the arena. Countering that financial stability is a demographic reversal not seen in British Columbia for over a century. This chart shows the scale of the contraction. In 2025, the provincial population declined by 41,000 people. Isolating the migration data, the trend is clear. Inflow from other provinces has flattened. A primary source of external housing demand has effectively stalled. This leaves the market reliant on the retiree population. They provide steady demand for high-end homes and are now the island's sole demographic engine. Without a steady influx of new residents, price growth can no longer rely on external pressure. The market must now be sustained by its internal, localized demographics. High borrowing costs have kept buyers cautious, leading to a significant drop in absorption rates. As homes sit on the market longer, the number of active listings has climbed. In the Victoria region, this slowing turnover has resulted in the highest level of unsold inventory in 35 years. This map visualization shows how that inventory is fracturing the market regionally. The Comox Valley shows resilience with 1% growth, while the Cowichan Valley is logging a slight decline. Across these regions, buyers are avoiding fixer-uppers. With high labor and material costs, move-in ready homes requiring zero renovation are fetching a premium. In the Mid-Island, Nanaimo's benchmark price is holding steady as the market adapts to these stricter buyer preferences. The Vancouver Island market has fragmented into hyper-local microeconomies. In this environment, specific neighborhood inventory levels now determine who holds the negotiating power. The current market is defined by a state of measured momentum. Buyers who can navigate the mortgage stress test now have access to a broader selection of homes and the leverage to negotiate on price and conditions. For sellers, pricing accuracy is now the most critical factor. Properties listed above current market data are no longer seeing bidding wars. They are simply seeing their contracts expire. High-quality marketing has become a requirement to move listings. Data shows that homes featuring cinematic video tours sell roughly 10 days faster than those relying solely on still photos. The double-digit appreciation of the last few years has slowed to a more modest single-digit pace. Navigating 2026 successfully requires aligning strictly with local data and executing with strategic patience.